change earned, passive, and portfolio income to tax-free. In this episode, I'm going to address the question, how to reduce the amount of tax you pay. And it's actually easier than you may think, but I'm going to enlighten you on the three types of income we pay income tax on. And basically, you just shift a lot of your income over to income that is not classified as those three types of taxable income. So get ready to gain insights into opportunities that maybe you didn't know existed before. So my name's Doug Andrew, and I've been a financial strategist, retirement planning specialist for more than 4.5 decades. I've been very blessed in my life to have authored 11 books thus far. In fact, I have a goal to release a new book every year or two the rest of my life. And we've been fortunate because many of them have not only been bestsellers, but New York Times and Wall Street Journal #1 bestsellers. They're stacked here behind me on the right. In my books, I oftentimes talk about the three types of income that Americans pay income tax on. And this all started back in 1986. This was the 1986 Tax Reform Act passed by President Ronald Reagan in his second term. And ever since 1986, there have only been three types of income Americans pay income tax on: earned, passive, and portfolio income. So let's go through and define what those three are and how you can take your income and get it out from underneath that umbrella of taxable income. Now, before I share those three types of income and how to transfer money over into income that is not subject to tax under the Internal Revenue Code, and this is not a loophole, if you know somebody who is intrigued and wondering how to reduce the amount of tax they pay, recommend this video, subscribe, and also search some of the other topics that are related to this one. Now, earned income would be income that you earn from actually working, wages, salaries, things like that. That's you going to work. Now, there's three sources of money. There's mankind at work, money at work, and charity. So most people, they're trying to save enough money to have their money provide income, which is great. So when you put money to work, you oftentimes receive that income or that increase with passive income or portfolio income. Passive income, simply put, would be like rental income or lease income if you owned real estate or you leased out machinery or equipment or boats or whatever. That's called passive income. Portfolio income is where you earn interest, dividends, and this is where most people have their money in mutual funds or bank accounts or credit unions or what have you. Most people's IRAs and 401ks are earning money as portfolio income, and you defer paying tax until you retire, and so you have to pay tax on that. So those are the three types of income Americans have to report on the front of their 1040 tax return. So let me simplify this. If you have income that is not classified as one of those three types of income, there is nowhere on a 1040 tax return to put it. It's tax-free. It's not a secret. It's not a loophole. It's not one of those three types of income. You don't have to pay tax on it. People say, well, what would that be? Well, I'm going to share with you what that would be, but let me tell you a story. I'm going to give you a dramatic story that is actually told in my latest best-selling book, The Laser Fund. And if you stay to the end, I'm going to show you how you can claim a free copy of that book for you. It's 300 pages containing 62 actual client stories like this one. This couple came to us. They lived in California and they were being taxed to death. They were in the highest tax bracket. If you are not aware, California will tax people up to 13.5% on top of the federal income tax. So these people were in a 39.6% federal income tax bracket. On top of that, another 13.5%. And so they were paying more than 50% of their income in taxes. They had done very well in their lifetime. And they had $4 million of tax-deferred money in IRAs and 401ks. And now, by taking it out, they were going to have to start paying tax. When they learned about the Laser Fund, they wanted to convert that $4 million of yet to be taxed money in IRAs and 401ks over to tax-free income. Well, they're going to have to subject that to tax. So they performed a strategic rollout. This was not a rollover. A rollover would be like taking money out of a 401k and rolling it over to an IRA and continuing to defer. And then people have to take out required minimum distributions, or they're going to be penalized 50% starting at age 72 if they don't take out the money the government wants you to take out, because the government wants their share. Okay. So instead of doing that, in 5 years, we got that $4 million out of their IRAs and 401ks strategically. We took care of the tax. We actually resurrected some deductions that they had been killing. And when we got all through, because we were earning really good rates of return, even after tax, after 5 years, they still had $4 million left after paying the tax on that. It's pretty incredible. But this is what happened. We took them from the highest tax bracket, over 50%, to a 0% tax bracket. Now, we can't do that for everybody, and I'm not necessarily recommending that you do this. I would recommend that when you retire, that 40 to 60% of your income is tax-free. It's not deemed earned passive or portfolio income. This couple went, why not 100%? So we did. Do you know that has doubled now in the last 7 years, because they've been averaging over 10% the last 7 years. They now have 8 million. 4 million grew to 8 million, tax-free. That 8 million, now if they keep earning 10%, that's 800 grand a year. They said, Doug, we don't need $800,000 a year. We could never spend that much a year in our life forever. They only take out 300,000. In other words, they're earning $500,000 more this year than what they need to live on. I mean, how nice of a problem is that? And so here they have 800,000. They only need 300 of it. So the other 500,000 keeps compounding and growing tax-free. We took their income off of their tax return. Let me simplify this. This isn't this couple's only income. They have Social Security and so forth. But if you have income that is not deemed earned, it wasn't earned income, passive, or portfolio income, there's nowhere to put it on a tax return. Do you know I actually have clients who have incomes of $50,000 a year, $100,000 a year, $200,000 a year? They don't even have to file a tax return. Because if you have no taxable income, there's no need to file a tax return. The IRS knows they're receiving the money. The IRS knows everything. But they know it's not taxable. It's not even worth auditing. Because for over 107 years, the money in a Laser Fund, a maximum funded tax advantaged index universal life insurance contract, has been tax-free. No question. They don't even audit them. We took this couple from the highest tax bracket to a 0 tax bracket the rest of their life. Can this work for you? I don't know, but let me share with you what you need to do to analyze this. And then I want to empower you with education. I want to gift you a free copy of my most recent best-selling book so you can learn how this may apply in your set of circumstances. So how do you reduce the amount of taxes you pay? Well, I have this software that I developed years ago. I think it's the only software on the planet that shows people the darkness of the night, how much tax you'll pay if you string out your retirement income by deferring, and taking out only the minimum thinking you're saving tax. When you add it all up, the tax you pay every year through your lifetime, your spouse's lifetime, your kid's lifetime, when you leave it behind to your children, because that's what most people tell you to do. Oh, if you don't need the money, stretch it out. Take the required minimum. Leave it behind to your kids. Do you know if you leave behind an IRA or 401k to your kids, they have to pay tax on it now within 10 years? They can't use it for their retirement unless they're retiring right after you. And so the government wants their share. I show them that they would pay $250,000, $500,000, $1 million of unnecessary tax by stringing it out. They were flabbergasted. They'd say, that's all I have in there right now. Well, yeah, because you're going to keep doing this. Uncle Sam's going to be your partner forever. People say, well, why did they tell you on CNBC to take required minimum distributions and stretch it out? And I go, who's funding CNBC? Government revenuers. Why would they ever tell you to kill a partnership where the government gets a piece of everything you will ever make if they can keep that partnership alive through your lifetime, your spouse's lifetime, and your kid's lifetime? Why would they destroy that partnership? See, in this strategy, you get the taxes over and done with, and then you convert to tax-free. I have dozens of stories of people, school teachers, real estate gurus, doctors, who we have saved them $250,000, $750,000, $1.2 million of unnecessary tax, where we take people from maybe the highest tax bracket to a 0% tax bracket by doing a strategic conversion, a rollout. You got to get the taxes over and done with sooner than later, but then take the after-tax monies and put them into something that's going to be tax-free from now on. What is that? My favorite instrument is what I refer to as the Laser Fund. Laser is an acronym that stands for Liquid Assets Safely Earning Returns. Technically, it's a max-funded, tax-advantaged insurance contract where you're taking the least amount of insurance the IRS will let you get away with and putting in the most money that the IRS allows under 3 tax citations. And this thing turns into a tax-free cash cow. I have earned returns between 7 to 10% tax-free for the last 40 years. The Laser Fund, every million can generate 60, 70, 80, 100,000 a year of tax-free income into perpetuity, which is double or triple what most IRAs and 401ks can generate if your money is in the market. So let me show you how you can learn more about this Laser Fund and see how it may apply in your particular set of circumstances. The Laser Fund has actually been grandfathered in the Internal Revenue Code for over a century. If you go, well, how come I've never heard about it? Well, it's interesting how many people do not know what they don't know because you can't be aware of something you're not aware of. So this is what motivated me to write so many books. And my most recent book is called The Laser Fund, How to Diversify and Create the Foundation for a Tax-Free Retirement. This will tell stories because this side is about 200 pages, 14 chapters with all kinds of charts and graphs. If you learn more by stories, you flip it over. And this side is 12 chapters with 62 actual clients' stories. So it's a right brain, left brain approach. The Laser Fund can be yours. It retails for $20. This isn't about selling you a book. Okay. I want to gift you this book. I'm into empowering people like you. And so if you go to laserfund.com, Laser fund.com, and you contribute a nominal amount towards the shipping and handling, I'll cover the rest of that cost, and I will gift you this book for free. To claim your free copy, go there now. Subscribe to this channel. Watch this next video and begin to learn how the Laser Fund can be used not only for a tax-free retirement, but a tax-free emergency fund, college education fund, working capital for your business, real estate management. You have no idea. This is like a financial Swiss Army knife. It has so many applications, so many ways that you can accumulate, access, and transfer your money totally tax-free.